Well, thank you all for having us. We are Favela Advisors. I know you've gotten to meet some of us as we made our way around the table, and we just want to start off by thanking you so much for the opportunity to be here. We are really enthusiastic about the potential chance to work with you, and the five of us are really looking forward to getting to dig in to talk to you a little bit about what we've been able to put together. So before I actually get into the meat of our presentation, I really want to start by sharing with you a little bit about our company. So you can see here our vision, which is to be the world's premier boutique investment bank. And this vision leads us to make very specific choices about the work that we do and the ways in which we engage companies that we work with. And so I think that as we continue with the presentation, you're really going to see this vision and mission come through, particularly when Kyle talks you through some of our historical work as a company and what makes us so good at what we do. So just to give you an overview of how we're going to spend our time this morning, I'm going to kick off by giving you an executive summary of the options that we've looked at for you all, just so that you know right up front what our recommendation is. And then we're going to talk to you a little bit about who we are as Favela Advisors. What have we been doing? How do we spend our time? And what are we really good at? And why do we think that we're a good fit for you? And then we'll talk to you a little bit about the state of the markets, just so that you can understand what's coming down the road and how we've used that information in assessing the options that we're talking to you about today. And that'll bring us into our evaluation analysis. So you can see the ways in which we've looked at the different options for you to lead to our recommendation. Of course, at the end, we want to make sure that you have the opportunity to ask some questions. We'll make sure we leave time for that as well. So like I said, I really want to be upfront with you about our recommendations. So as we went through our analysis and evaluation of options for you, we wanted to be very intentional about the different objectives that you've laid out for us. So the two that were explicitly stated were to maximize shareholder value and to maintain Titan's family legacy. Implicitly stated, we felt were minimize the risk at this time, and also to maximize liquidity, which might lead you to be able to make some different choices down the road for your other subsidiaries. So as you can see very clearly here, our ultimate recommendation is for you to accept the offer from Charger. This gives you a $658 million value. This maximizes your value for your shareholders truly, which we see as the top line objective of this transaction. And ultimately, this does not compromise your ability to maintain the family legacy of Titan, because while you would be selling Jupiter, you would have your other subsidiaries that you could really pursue strategic options with, and you would have the liquidity to be able to do that down the road. That would allow you to really capitalize on some other industries, maybe your cloud business, and really live out your legacy there while gaining that value from the sale of Jupiter to Charger. We've also looked into the status quo and acquisition of Lightning options, and Dave is going to talk to you a little bit more about that in just a little bit. And then we've added another option here for you too, just to pursue other alternatives that might maximize your value, which includes the acquisition of Lightning, but actually an IPO in 2021. And we have some evaluation analysis there for you as well that you can look at. But again, nothing is really going to hit home the value the way that accepting the Charger offer will, and so that is ultimately our recommendation. So, why the five of us? So the five of us have over 100 years of experience, and you can see that really clearly here, but what's more important than just the years is really what we five bring. So we wanted to make sure that we brought you a dedicated team of people that have depth and breadth of experience across a variety of transactions, but also specifically the options that you're looking at today. And so, I personally have experience on the buy side, and we are recommending a sell side transaction, but we felt like it was important to look at all avenues, pursue all possibilities, and that's why we stand here with you. Dave has experience specifically in marketing as an industry, and so it's important for us to ensure that we built a dedicated team for you all that can represent everything that you're looking at, so that you really know that you're getting the best from our firm, which we're going to talk to you a little bit more about next.
For over 40 years, Favela Advisors have been helping companies like yourselves build value for their shareholders, whether that be a family legacy, which is so important to Titan today, whether it's increase their stock price, whether it's sell a company or buy a company. We've helped companies specifically like you grow that shareholder value and meet their goals, whatever that may be. As you can see on the slide behind me, we've done it across broad sectors and across geography. And the most important thing that we can tell you today is that Favela Advisors isn't a transaction bank, it's a relationship bank. We build our relationships with our customers so they come back. And our proudest stat is that 98% of customers that do business with us once, they come back for a second time. So today we were so honored to be here with you, not just because of we can collect 3 to 5% on a fee of a transaction if you choose us, but we really believe it's the first step in building a long-lasting relationship with you for 5, 10, 15 years down the road. And whether that be in a healthcare industry or in Europe or in South America, Favela Advisors, as you see, we span geography, we span different sectors, and we can really help you with whatever the goals may be. Specifically today is the liquidity and building that family legacy. We've been the fastest growing investment bank for the last 8 years. As you can see behind me, we have a 50x increase since 1990 on the buy side, or on the sell side, and on the buy side, a 70% increase. Specifically, on the sell side, we've done over $60 billion worth of deals since 2010 and $48 billion worth of deals on the buy side. So we're very proud of that. And again, lots of transactions here, but many of them are repeat customers because of those long-lasting relationships that we build with our customers, which we're so very proud of. We have a proven track record. For instance, we've sold companies to private equity firms. We've bought companies from private equity firms. We've worked with competitors buying others. For specifically, Blackbaud was a competitor of MicroEdge. However, Blackbaud thought it was a really good strategic fit to buy MicroEdge because they covered some sectors that Blackbaud didn't cover in the nonprofit space. Created a ton of value for Blackbaud. They launched a bunch of new products since that acquisition in 2013. It's been a huge success. I highlight specifically, we've worked with Charger Capital for the last 10 years. We've done specific deals with them over the last 4, both on the buy side and on the sell side. And we all believe that there's not a better investment bank in the United States or in the world that can help you close this deal quickly and help you gain the most value from Charger Capital and give it to your shareholders and really create that family legacy, which is so important. Yes?
Even with your relationship with Charger, do you see any risks associated with actually closing this transaction? Or how would you recommend mitigating those risks so that we can make sure we're making the right decision?
Yeah, absolutely. Dave, would you like to talk about that? You did a lot of the risk mitigation, if you would like.
Yeah, I mean, so you have to look at it, you have a closing risk scenario, and as we'll get into a little bit of the state of the markets, but right now market conditions are ripe, we believe, so it's important for you to select a bank that can really work well with Charger Capital, knows what their needs are in order to compress that timeline to ensure that you close the transaction before lending conditions or market conditions take a turn that are less favorable than today.
And do you think it's worth also entertaining other offers? We have a firm offer on the table, but do you think it's worth also entertaining offers from?
Absolutely. So as you saw on the slide, I'm kind of the private equity guy on the team. I came from Vista Equity. I spent 10 years with them. And I'm not sure how many of you are familiar with Vista Equity, but they specialize in software companies that make companies more efficient. When you take all of their 20 or 30 subsidiary companies that they own, they're one of the top 10 largest software companies in the world. So we absolutely believe you should reach out to Vista Equity and other private equity firms. We, again, have relationships with them. Absolutely, the short answer is yes. I think we firmly believe that the offer of $560 million for you guys is low, and we believe we can get more value out of it.
And that's how you're going to earn your $20 million?
Yes.
We'll come back to that.
We've got a slide on that at the end, so happy to discuss that as well.
Great. So to further illustrate our experience and our expertise in advising clients that have faced situations similar to yours, we wanted to point out a white paper that we authored a number of years ago. Because we had helped so many clients facing the situation of acquire or sell, we felt that it would be particularly helpful to write about our insights and our details and how we've been able to help our clients really achieve immense value. So we think this is really a great paper, and we recommend that if you want to learn more insights and details into our past success, we recommend checking it out. So far we've been able to kind of tell you about our experience and our success from our perspective, but we thought it'd be helpful to also hear some testimonials from our past clients. Key takeaways from the first two would just be how impressed they were and how happy they were with the level of service we offer. we're just trying to build relationships and help you as much as possible, and we go above and beyond, and they were really happy with our level of service. And then I'd like to highlight in the third one, we advised Rich Robertson from Whistler. We felt that, we actually think that Whistler was facing a situation similar to yours in terms of the timing in the market, and we advised them to sell the company because the timing was right, and ultimately the market did experience a downturn, and he was extremely happy that we recommended that. So that brings us to the current state of the markets and the M&A landscape. So the bottom line is we feel that the timing is right to sell now because the markets are going to become more challenging and there's a lot of uncertainty in the future. So we have a couple charts, global M&A deals, global PE deals. From 2012, 2015, we saw a huge run in the M&A market correlating with strong equity markets driving up valuations. And now you can see the last 4 to 5 quarters, deals have consistently fallen off and are going down, and we project that to continue into 2017. So with everything combined with the decreasing deal flow and the high valuations, we think it's going to be less attractive for acquirers looking to make deals in the future. So we feel it's unlikely that you're going to be able to find an offer as attractive as Chargers.
I have a couple of questions for you just about these trends that you're showing. I mean,
Yeah.
I only need to find one buyer. I don't care if there's 1,000 buyers
Right.
out there.
Mhm.
So why is it bad if this is the backdrop that we could be selling into? If we wait a year and
Yeah.
take our time a little bit more.
Yeah.
I'll take that actually. I think along with what Alex is talking about, we're looking at the general trends. You also have to take into account the current lending markets because we're also seeing it's not likely that the current market liquidity from a capital market standpoint will be as favorable in the future as it is today. One of the reasons Charter is able to offer the premium that they are is the fact that they can obtain leverage at an inexpensive rate today, and we don't expect those market conditions to continue moving forward.
Okay, that's helpful. Thank you.
Absolutely. Yeah, we're the key here is we're trying to illustrate, we feel it's risky to try to, expect that there's going to be attractive deals in the future when there's such an attractive deal right now. We also illustrate the IPO activity just because we looked at the other options to try to find the most value for Titan, and one of the options would be to acquire Lightning and then maybe look at an IPO in the future by spinning them off. But with so much uncertainty, we just think the risk is too great for that.
Yeah, now I'm going to jump in, and I think this will help address some of your questions as we go through this valuation analysis. And I guess just at this point, we'd like to take a pause and congratulate you, Mr. Bright and Early, and the rest of the board for really building a great operating company in Jupiter. There's a lot of value that you've created here, so we just want to recognize that and help you put a value to that and consider these different strategic options. So as you can see here, we peg the value of the Jupiter unit on a standalone operating company basis of $450 million today. And we come to that number through a variety of different valuation techniques. So we did some fundamental valuation as well as some relative valuation. And then I also want to point out the LBO valuation. So this kind of goes back to your question earlier about looking for different bidders. Do we want to shop Jupiter around to some other potential buyers? And I think what's interesting, the insight that we can draw from this is that Charger isn't just simply operating a private equity model and able to earn their returns just by simply leveraging up your business and acquiring it from you. They actually see real value in the synergies that they're going to create. And that's kind of the big difference between what they're coming to the table with and what we would expect other private equity buyers to come with. And then just the second chart down, we then looked at the valuation of acquiring Lightning and what's the present value today of those combined businesses. We pegged that value at $750 million, again relying on some of the same valuation techniques. And importantly in this, we did give credit for the 6% increase in sales growth that you highlighted to us. You find achievable, as well as the cost savings that could be achieved here from leveraging Lightning's technology with your current business.
On the synergies, how did you layer them in? Is it something we're going to achieve day one? Is it something we're going to achieve years from now?
I'll probably take that. So in order to get an apples to apples comparison, we looked at the synergies as of day one to be in the most favorable conditions. And at the end of the day, this $750 million valuation doesn't take into account the acquisition cost. Trevor's going to get into that in the next slide. But at the end of the day, we were as advantageous as we possibly could with the Lightning acquisition, but it ultimately didn't add up to the premium value the Chargers wanted to offer.
And so this chart, we wanted to expand on those two different options and look at the actual value for you, Titan, you, Mr. Early, and the rest of the shareholders. So Jupiter standalone value, again, $450 million. Chargers offer of $560 million is a 24% premium to that offer. However, importantly, in operating Jupiter, you build up a big excess cash position, and they're willing to purchase this company debt and cash free. So we want to get to cash as a real value, and we want to take that into account because that can be swept up into Titan to use either to pay a dividend or for other operating entities. And so we peg that value to you of $208 million, the net there. And then when we look at the buy Lightning scenario, again, we have $450 million. We have to purchase them for about $200 million. And then the value that's going to be created for you all and the shareholders would be $108 million, and that's from those synergies that are created.
So now that we've looked at some of the state of the markets as well as the core valuations, I'd like to bring you back to the 4 strategic alternatives that we considered in making our recommendation. We had the status quo. We also had accept the Charger offer, go through with the Lightning add-on acquisition, and then also the final alternative was to IPO Lightning and Jupiter combined in 2021. But ultimately, as you can see, the synergies projected through the Lightning acquisition simply don't add up to the value to shareholders as a result of the Charger premium, as well as the realization of cash today. And in addition, not only does accepting the Charger offer maximize the value to shareholders today, it's also the only alternative that hits on all the other criteria and objectives pertinent to the board's consideration. Minimizing risk. As we've mentioned, we expect M&A deal flow to decrease. We also expect lending markets to not be as favorable as they are today. So you have to look at the market risk, in addition to being able to identify a strategic buyer, such as Charger, that's willing to value those synergies. And we absolutely want to make sure that we do our due diligence today and identify any other strategic buyers in order to increase your negotiating position with Charger. But it's important to consider in the future, it's not likely, or you cannot assume that you would be able to find a strategic buyer such as Charger that's willing to pay for that premium. There's also, sorry.
Quick question. You're talking a lot about the macro risks here. Have you thought any about the sort of specific deal risks associated with selling a Charger in light of their recent history?
In terms of
having failed deals and.
Oh, yeah, absolutely. I mean, again, that's another reason why you want to make sure you can identify all the potential strategic buyers you can today to increase your safety net, if you will. If that Charger deal falls through, you have a backup plan that you could follow through with before market conditions take a turn for the worse.
And I think importantly, you have a great operating asset in Jupiter today. So it's kind of advantageous for you, right? Because as far as we know, there's no real, nothing driving having to get a deal done today. However, it seems to us that Charger has seen a lot of value in your company that they can create by combining the two, and that they made a good offer and they're willing to pay up for that today. So.
Do you think we lose the Lightning deal if we proceed Charger and then try to go back to them later?
I think that's a likely scenario based on the market conditions that we've seen. But at the end of the day, the Lightning acquisition is at the higher end of the multiple range, and as a result, the present value of the synergies is lower than it probably would be otherwise. Right. Now I'm going to turn it over to Kyle on this.
Yeah, I think you had one last question. You raised your hand.
I was just going to say, I saw the timeline of the M&A process in the appendix. I think if I'm reading it right, it's
Thumb through that so everybody can have it.
It's over 4 months.
Yes.
Is there any way, given the fact that we have already identified, we have an offer in hand today, is there any way we could work with you to accelerate that if we do choose to pursue?
Yeah, so I absolutely. The short answer is yes. The longer-winded answer would be, with our great relationship with Charger, we believe that we can accelerate it probably by 25% or maybe even cut it in half. But we wanted to give you kind of the worst-case scenario of, if there were some challenges, if there was struggle with the banking rates, if Fed raised rates in January or February, whenever that
So
might
this is a
happen.
more typical.
Yeah, more
scenario.
typical.
Absolutely.
But we're very confident that we
Okay.
can increase that timeline, just due to the sheer fact that we have such a great relationship with Charger.
Okay.
Wonderful. Well, with that, again, we just want to thank you so much for your time. Really, really appreciate it, and happy to take any questions if we have. If you have a few minutes left, I know we have 20 minutes.
Can I ask a question? One more question. Let's talk about your fees. 35% to do what? We have an offer. An unsolicited offer, we have an offer. What are you going to do to earn your 15 to 20 million? And if time is of importance, how does that enable you, in combination with earning your fee, why do we have to go to strategics?
Dave or Trevor, you're kind of our
No, I
comment?
mean, we discussed this while we were planning this trip, right? So we traveled to Cleveland, Ohio, to give you our financial opinion on these transactions, and we think we're bringing value to the table there. However, we fully recognize that we are coming to you with the proposal that you aren't shopping this around. We're giving you our opinion to go with Charger, and I think that's why we spent time. Look, everything's negotiable, and we realize that this isn't the typical timeline that you would see. So it's not your typical type of engagement. So that could be negotiable, but I think that's why we spent time about wanting to build that relationship for transactions down the road.
Okay.
Going forward.
Thank you.
And anything I would add on that is, I think we create that value is because of, again, our relationship with Charger, is that we can help mitigate some of those risks that you had mentioned that Charger had failed some deals in the past. We're confident that with our relationship that it won't fail.
Okay. Thanks, guys.
Wonderful. Thank you so much for your time.
Thank you.